As we look at this week, the first thing to be aware of is it could be some holiday thin trade with the US Thanksgiving on Thursday. So remember, holiday thin trading can result in outsized moves as well as the potential for narrower ranges. So just be aware of that holiday dynamic that's going to be underpinning the whole week. Monday starts with a pretty light calendar front. There isn't that much going on in the European or the US session. We've got Bank of England Governor Bailey speaking later on in the UK, but the outlook for the pound is weak, bearish. We did see a better than expected CPI print last week, so we have seen a little bit of relief from some of that pullback we've seen in the pound, that rally being bought. We've seen that being sold off a little bit, not expecting any key drivers from Bank of England Governors Bailey. The only thing to look out for if he starts sort of giving any kind of indication of rate cuts, even if it's sort of mentioned, then look for pound downside to continue. Later on in the start of the week, we have RBA Bullock's speech. That is likely to lift the Australian dollar because what we've been seeing out of Australia is a more positive data front recently. If you look at last week, you can just see that the Australian wage price data has come in higher than expected at 4% for the wage price index. Let me just see where that is. That's it, 4% coming in above the prior of 3.6%, and the quarter-on-quarter data was revised higher. Now, that's obviously inflationary. If wages are increasing, that's an inflationary pressure. And then we had the Australian jobs last week, which also moved higher, with the headline being a decent beat of 55,000, but the majority of that was part-time, and the prior was revised slightly lower, but then the full-time employment had a higher revision as well, so that was offsetting the part-time revision. And on balance, if you look at it as a whole, participation rates higher, inflation expectations significantly higher, and the headline beating expectations. All of that just speaks of inflationary pressure. So don't be surprised if we see some Australian dollar upside overnight. And, looking at the surprise index from the City Economic Surprise Index, you can just see that we are seeing, just take a look here, a nice uptick in a lot of the Australian dollar pairs. You can see as the economic surprises are surprising to the upside, so the Aussie US dollar moving to the higher, Aussie CAD, Aussie Swiss franc, Aussie New Zealand dollar, that's the red line, pointing up for all of those pairs on the Australian dollar, which does, indicate that perhaps we could see a surprise as RBA Bullock mentions that inflationary pressures are more significant. In the last RBA statement, that was highlighted as a risk. And on top of that, we also have the fact that, inflation in Australia, 5.4% year on year, the core 5.2%. And if you compare that to other countries in the G20, you can see Australia is sort of right high up the pack now. And, UK inflation is now lower than Australia inflation. And it's only Argentina, Turkey, and Russia with higher inflation than Australia. So I suspect that's going to get the RBA's attention. And with the inflationary pressures last week, there's nothing to relieve that pressure. So I wouldn't be surprised to see Australian dollar upside overnight. And you've got the meeting minutes coming out as well at the same time. Now, we did see in the statement and in the time after the last decision, the RBA was considering keeping rates on hold, but decided not to because of inflationary pressure. So you could see them saying, okay, we're going to stay higher for longer, or RBA Bullock could say something like that, or the data's indicating a minute to do more. If she says something like that, then look for Australian dollar upside. Aussie Swiss franc could be quite a nice potential trade because you've got the New Zealand balance of trade data at the same time. Now, that is expected to show a deficit of 2.5 billion, with the Westpac sort of see that being a little bit better than forecast at 1.8 billion with some of the effects cited for waning of earlier weakness in dairy prices. So just watch out if you're trading the New Zealand dollar. Just look out for that, because you've got the Aussie and you've got New Zealand trade data, which could give a bias to the New Zealand dollar. So that could work in favor or out of favor. If that's worse than expected, and the balance of trade comes in, greater than minus 2.5 billion deficit, and then RBA bullets is more hawkish, and you could see a nice Aussie New Zealand dollar uptick. Canadian CPI data. Now this is interesting, and very interested with the Canadian CPI print, because the Bank of Canada have cited concerns about the persistence in the core inflation, and higher inflation expectations, wage growth has all concerned the Bank of Canada that inflation is becoming entrenched. So if we see this coming in, higher than forecast, and there isn't any expectations we got here, so look for things coming in. If it comes in higher than the prior reading, that will be very significant. So year on year coming in 3.7%, the median coming in 3.8% or higher, core coming in 2.8% higher. If we see this surprising to the upside, and above the prior readings, that will confirm some of the Bank of Canada's concerns about inflation becoming entrenched. So we know that they're worried about that. So a high inflation print here should support the Canadian dollar. Oil prices have been falling recently, just as the sort of inventory levels have been, reassuring markets that there isn't a supply problem, and the Middle East crisis has just been pulling back from red hot worry about a wider conflict spilling out into the region, and reducing oil supply to the global market. With that fading, CAD's just sort of finding a little bit of weakness, but we could see CAD strength develop if we see a strong print here on Tuesday. So watch out for that. And with the dollar CAD pair just pulling back from that 1.3800, then flirting with this trend line, dollar CAD downside could be very attractive if we saw a strong Canadian CPI print on Tuesday. It's definitely something to look out for. We also have FOMC minutes coming out on Tuesday evening. Now, the latest kind of Fed decision is really the Fed's in a situation where we could have reached peak interest rates, but it will depend obviously on the data. Markets are seeing where is it? They're seeing like nearly 100 basis points rate cut priced in for next year, just down from 5.37, nearly 100 basis points for next year, and the first rate cut coming in June. So May, June rate cut is the current expectations. There's not expected to be anything new from these FOMC minutes. So it's not that we're expecting any new developments as such, and just look out, because markets can sometimes push off from these minutes, even though there isn't any new development. Sometimes it's just sort of a reaffirmation of what markets are currently pricing is sometimes enough so to continue more dollar weakness. So the only thing to look out for is if we see anything in the minutes that indicates the Fed may have another interest rate hike to come, that will concern markets and send the dollar higher. But for now, Fed Chair Powell's, he's saying that, there's still a long way to go on inflation, and that they're not yet confident they've reached sufficiently restrictive policy stance. So you could see a bit of a pullback in the dollar on those FOMC minutes if some of those concerns are repeated. Just watch out for that. We have seen quite a lot of dollar weakness, and just remember where we are with the dollar. You can see we've seen weak non-farm payrolls, 1% fall in the dollar. Weak US CPI print, 1.5% fall in the dollar. We've currently opened the week with dollar weakness. So sometimes, with markets moving so clearly in one direction, just watch out for a potential retracement late Tuesday evening in some of the dollar weakness, particularly if there's more concerns. It could literally go either way. That's the difficult thing with the FOMC minutes. So sometimes, what does the market focus on? So just watch out. Really, that's a sort of risk factor for the dollar that's likely to set the risk tone for the next day. UK autumn statement. There shouldn't be much news here from the UK. Next general election is due within the next sort of year. So the UK Chancellor Jeremy Hunt will likely want to keep some potential tax cuts or tax benefits for the election coming up. So this should just be a holding situation. You might there have been mooted around. There might be some income tax cuts coming, national insurance tax coming, and slightly better budget deficit situation gives the UK a little bit of powder, to play with, a little bit of ammunition for a statement and some relief for the UK economy. But it's expected to really come before the general election. So just watch out for that. Mildly supportive for the pound in the time being, but shouldn't have any fireworks from that. And got the initial jobless claims, continuing jobless claims data. A big miss here that should play into dollar weakness. So watch out for that. Consumer sentiment. There's the final readings for US Michigan data. With the final readings less likely to create any tradable opportunities, so that shouldn't be too much of an impact. Canadians, Bank of Canada Governor Macklем's speech, that can be significant, obviously, depending on what the CPI print is. So if this is a high CPI print, then watch out for potential further CAD strength if Governor Macklem raises those inflationary concerns. So that will be playing into the CPI print. Aussie PMIs, again, it'll depend a little bit on what's being said by RBA's Bullock and the RBA statement. But a good print here, a strong print coming in above forecast, you would expect that to support the Australian dollar higher. Thursday, we got French, German, Eurozone, UK PMI prints. The situation with Europe is, lower growth. It's a more dour outlook. The EU has probably had the last interest rate hike. Now markets aren't expecting another interest rate hike, but obviously it'll depend a lot on the data. So expect European data to really lead the euro at the moment. Obviously, dollar weakness is supporting the euro, but if we saw like a really surprise beat here, and particularly the German metric, Germany is the sort of engine of Europe. So, strong German data lifts the whole eurozone. If we see sort of decent signs of recovery in Germany, markets will get excited about that and expect euro upside. Negative prints, contractionary prints, just what expected. So the best opportunity will come from a big beat in the data. Look for euro upside if we do see any beat in the data. UK, again, it's got a weak bearish outlook for the UK. If we saw like a strong European print and a weak UK print, then you could look for sort of euro pound upside. Otherwise, for the UK, just look at the currency nearer the time. So strong European data. Remember, we start with the French, German, Eurozone, and the euro will start moving from the French data. Really solid, consolidate that movement with the German data. By the time you get the Eurozone data, the story is usually over by then, because the French and German data combined makes up a large proportion of the Eurozone data as a whole. So you start looking at the French data in earnest. Then we got the UK data. Again, if we saw, a strong surprise to the upside, then you can look for potential pound gains. Contractionary territory just was expected. I don't particularly see any opportunities there. Maybe an opportunity against the euro, but nevertheless, UK PMI data is coming out. Japanese inflation data. Now, with the Bank of Japan, what they're talking about is that they're thinking spring next year is really the time they're looking to exit negative interest rates. So look at springtime next year for the major driver in the yen. If the inflation data comes in, significantly higher, we could see some more yen upside. But the Bank of Japan's been very slow in exiting negative interest rates. I'm thinking we might do it spring next year. So it's all focused on spring 2024 for interest rate hike changes. But this could, push around the margins. Is it really tradable? Not really, unless this is an exceptionally strong print. And then you would look for something like euro yen downside, pound yen downside, even dollar yen downside would be acceptable. On Friday, we got US PMI data points. Again, slowing US economic data should be negative for the dollar. Lower interest rate expectations for the Fed should lift stocks. That's the normal playbook we've been seeing recently. If it's very strong data, then you look for upside in the dollar. You remember the issue with the US at the moment is that, yes, we saw non-farm payrolls fall lower, and there is a slowing growth that's been driving expectations of US interest rates peaking. But if you also look at the GDP growth rate, you can see this is something that's concerning the Fed. That's what the highest GDP growth rate quarter on quarter since the fourth quarter of 2021. So very strong, GDP growth rate for the third quarter of this year. That's got the Fed's attention. So what we need to keep an eye on is just keep an eye on the print. If it comes in, very strong, then that's going to play into, a stronger US economy. Yes, it's a soft landing, but also it can potentially mean higher interest rates might be still needed. So then you'd look for dollar upside, euro US dollar downside. Looking at the CFTC report, you can see that the dollar is still stretched to the upside. So a further retreat in the dollar makes sense. Selling dollar rallies looks absolutely fine. As long as we have expectations of peak Fed rates, then expect rallies in the dollar to be sold. The New Zealand dollar, very stretched to the downside. Similarly with the CAD. So that highlights the Canadian dollar for me. If we do see strong inflation print, then we could see some Canadian dollar gains, particularly with heavily sold positions in the CFTC report. We could see some of those unwind, maybe a few longs initiated. So you expect that to unwind. Aussie dollars unwound some of its recent weakness, and that's continuing to edge its way higher this week. So potential for more Australian dollar upside. Remember, the problem with trading the Aussie is it's also very closely linked to the global risk tone. If global risk tone is positive, then you expect Aussie dollar upside. If global risk tone is negative, then you expect Aussie dollar downside. So it's a kind of a mix week. There's things here that could be a catalyst. The best scheduled economic data point is by far and away the Canadian inflation data on Tuesday. And then obviously US data will be very important and worth keeping an eye on the Eurozone PMIs as well. But the main data points is that US PMI print and the Canadian CPI print for the first part of the week. I think the RBA meeting minutes speeches shouldn't be overlooked. And if risk tone turns more positive, we could see a really strong week for the Australian dollar, particularly if we start to see the RBA acknowledging some of this greater inflationary pressure that is even grown in the last week.